So Xavier, first up, let's look at NZD. So we're back to quarter time frame, and I'm looking out for monthly supply and monthly demand. I mean quarterly demand, quarterly supply, quarterly demand. In fact, to make it simple, I'm looking for quarterly break of structure. That is what I'm looking for. So just to make it very simple. So on quarterly price, create a demand floor here, and I've rallied, came back, broke the structure, returned back, and normalized and respected it twice. Demand floor one, demand floor two. So if we pair the three demand floor, it makes an ascending trend line, slightly elevated. This is not horizontal, slightly elevated. So we keep it. What that means is that as we have seen this current month bullish candle upswinging, it has to demonstrate its resilience. If it breaks this structure, then it will stay on it, and we'll see that NZD have continued to rally. But we have something that is coming up on 28th, and we have looked at the interest rate differential and the 10-year bond yield for both New Zealand and United States. Now, the NZD USD carry trade dynamics from May 25, maybe towards the end of this month, will be shaped by the diverging central bank policies and bond yield spread. So, and on 28th, there will be most likely a data report that will come in to support those claims. And from there, we'll draw a critical decision as to where the carry traders will tilt. But for this is a value structure that in the future, if price returns here, we also look out for a sell opportunity there on quarter. So when the quarter candle enters here, of course, most traders who are going long, those institutional traders who going long, they do quarterly and monthly and yearly trade. They do not chart intraday because of what? It does not meet the performance expectation. Because in this case now, we have seen a breaker. Now you go back to quarterly line chart. This is a double top structure. So you can imagine you seeing such a chart pattern, a double top on a quarter time frame. That's a strong bearish price action. And after price have broken from that, look at what USD has done to NZD. It brought New Zealand economy, brought them down to the barest minimal. And if you look again on the quarter time frame, we have a clean descending trend line, on a quarter time frame. And to be more realistic, NZD USD looks a little bit bearish. Not a little bit bearish. It is bearish. That is what it is. That is what it is. So it's um it's practically what trade sometimes is all about. And for those who are trading quarter candle, after them establishing this two demand floor, they could place a buy bet and go home and go on holiday, knowing fully well that after one quarter or the next quarter, the buy will be triggered. Look at here, if you take a buy position from here, go home, the trade hits the supply roof, you returns here, you take a buy position, go home, don't trade again. It returns here, you take a buy position, don't trade again, it goes home. And within this candle, there are multiple ups and downs. There are multiple ups and downs in one single candle. They ignore it all because what they are trading a much higher time frame. So I think it's high time we begin to look at trading at a much higher time frame because of the clarity it brings. You see, one of the things that allow a trader to make money in trade is clarity. And for me, it is one thing that I always pray for is to have clarity. The moment you have clarity, you have just won. So, and where replace you find clarity is on a higher time frame. And let us also see what price have done here. Look at the ascending trend line here in time past, the way price have bought from 2005 going up. So we see that on 28th, there will be a strong monetary policy change. But at the moment, the interest rate differential from the Reserve Bank of New Zealand rate is 3.50 as at April, and we're looking at 25 basis points cut to 3.25 expected by May 28th. That is 2 days from now. While Fed have kept rate steady, 4.25, 4.5 as at May 7. The interest rate differential remains 1.25 in favor of USD. So it's expected that RBA court could continue to send it down, and its ability to sustain above this current broken structure looks it's in jeopardy. The probability that it will retrace from there is very high. Why am I saying so? We have here a triple top structure. So you have a triple top on a quarter time frame. You can see that structure: sell one, sell two, sell three, break of structure. So I can't say what the market is going to do, but this is a triple top structure, and price broke out from the neckline. And after breakout of the night, they came here for a test. So now they are going to drop interest rate by another 25 basis points on 28. It is likely that you will see the quarter candle begin to retrace. And we are heading into a new month. We're heading into a new month, right? And the new month have only 1 month left. The quarter candle have 1 month left to complete. It have 1 month, 5 days. So if they go by what they want to do, you could potentially see that candle reject. Yes, you could see it reject on the quarter time frame. So you could be seeing that because this chart is three months. Each candle is three months. Now we are having clarity into where we are going. So now we have economic data. The economic data is in the hands of USD. Already we have the interest rate differential in the hands of USD. Then look at the 10-year bond yield. The 10-year bond yield spread for US is at 4.54 close at May 22. And the New Zealand 10-year bond yield is at 4.7. The spread is 0.16 for New Zealand bond. So it marginally reduces the US yield advantage, but insufficient enough to offset the interest rate gap. The gap for the interest rate is high, despite bond yield being in favor of NZD. So how does carry traders come inside this thing? The mechanism is very simple. The carry traders will borrow money NZD at 3.25 and invest in USD asset at 4.50, yielding 1.25, analyze interest spread. So if it depends on the amount of leverage a carry trader takes, but whatever the leverage he takes will be multiplied by this by analyze the bond yield difference. So that's how he's going to make his money. So we'll be looking at key events for RBNZ on May 28th, and the decision is going to be critical. And a confirmed cut could likely weaken NZD, thereby enhancing carry trade profitability. It's going to affect their profitability if they do so. So let's look at monthly quickly, and after that, we are going to draw a final verdict. And I will say it again that as NZD is marching into monthly time frame, I also want to look at the structure on a monthly time frame. We'll have an ascending trend line here. This ascending trend line will have a breakout. So you see, on a quarter time frame, we confirm a breakout of a triple top structure. On a monthly time frame, we confirm a breakout from an ascending trend line. All bearing what? Bearish weakness. The weakness is saying bearish. Now, what we want to see is that if the monthly candle can upswing and go back to retest a broken ascending trend line, then that will give it an opportunity to break the quarterly supply roof. And if the quarter candle closes above that quarter supply roof, it returns it on demand, meaning that the next quarter candle may likely seek retest and continue to buy. But if the quarter candle closes below that, then it's a confirmation of a bearish continuation, because we are using quarter candle and monthly candle in our analysis, so that we're looking for a long-term direction. We're looking for long-term direction of trend. That's all we are looking for. We are not looking for short-term. If it's for short term, we won't do this. So NZD USD carry traders remain attractive in the short term due to the 1.25 rate differential. But the RBNZ dovish tilt and the narrowing bond yield spread will introduce volatility. So we must monitor what 28 will bring. If they cut rate by 25 basis points, then there is no hope. NZD will continue on its bearish path. Look at the structure on a monthly time frame. You can see it. I didn't make this up on my own. So let me adjust this structure because I know what price is likely going to do, and let's factor the weeks. So let price come to this zone. So this is where I'm going to place my descending trend line zone, where I expect NZD to return again if they cut rate by 25 basis point again. If they do so, then most likely that the 10-year bond yield, the difference might be ignored, and traders will focus more on the interest rate. And I think it's part of the strategy. So let's see what happens here. And if price breaks, let's see what it does as it's approaching this zone. I want to see if price will retest here. If it retests here, break this structure, then on a quarter time frame, we have broken that supply roof. But if price comes here and respect it, then it looks like we are going down. It looks like price is going down from there, from that monthly analysis. But I think market has already tested this floor before and rejected. Let's see if price can go back here to retest this broken ascending trend line. And if they do so, then they have broken the quarter supply roof. They have broken it. So let's see if they can be able to do that. But if they can't, then they are on sale. So if we break here, then we'll come here. Then most likely that we'll return to this roof again. So for now, tomorrow will play a critical role into what Reserve Bank of New Zealand wants to do. So watch them and see what they want to do. And we have seen how price peaked demand on these long-term supply roof. I mean demand floor. Sorry. So you see how price have come here starting from 2008. Look at it from 2008. So it's always good to look at price on a quarter, on a monthly time frame. It gives you a clue. Price used here as a demand floor after break of structure. Price returns here as demand one, return here as demand two, and return here as demand three. And we have seen how from January to February and another return into May have set price up. It didn't do so because it's a mistake. It did so because there is a price action at this level. Look at the structure here. The structure started from here. After we had a demand floor and price bought up, came back, broke that structure. There's a break of structure at this level. Then the monthly candle came, retest, broke that structure. After breaking that structure, market normalize. So most times when we have a breaking breakout, the market will normalize. Breaking breakout, market normalize. Breaking breakout, market normalize. So it is normal. So sometimes when you see a break of structure, don't rush and wait for a test because market can break in and break out. It break in and break out. But once it breaks in and break out, it normalizes. This is based on experience. Look at here, we have a structure here, a break of structure, market return, broke it back, but it started normalizing. It normalized for three times, three good times, one, two, three, giving you a sweet demand floor. So I want to use that as my demand floor because of what price has done. So carry traders, they are the ones that are doing all these things. So when they see it, they already rush and borrow money. They rush, go and borrow money. Sharp, 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 sharp. So let's see what will happen that if we might have more sell bets coming in, if we have more sell bets, then the fundamental data that will be coming on 28 due to interest rate cut might really make it very unfavorable for people to invest in NZD. So it will likely they borrow from a low yielding interest rate economy and invest in a high yielding economy, which is the USD. So that is what I see at the moment, and that is what I see. So let's see if America stabilizes on most of its, tariff hammer slamming on other economies. If they can pause that for now, the market will seek equilibrium and trade in a very reasonable direction. But for now, trade dynamics is still in turbulence and the market is not moving in the direction as expected. So we see what price have done there. So now let me tell you something. There is a probability that NZD might escape. There is a very probability. So my reason for that is this: price has created a supply roof here in 2014, return here, create another structure in 2021 on a monthly time frame, and we have created a demand floor here in 2010. We create another floor in 2015, and we return here 2020, and we fail to update. So technically, the market is hanging, making it a little bit in a state of imbalance. It didn't touch the floor, it didn't touch the roof. So where is it going to? Where will it touch first? Will it touch the roof first or will it touch the floor first? So now this is where it becomes technical. If it breaks out from there, there is a probability that the year might close on a serious bearish note for NZD, right? So if that doesn't happen and let's say on 28 and they end up not cutting rate or they allow rate to be the same, if they allow rate to be the same, hallelujah, NZD will upswing. NZD will upswing. Yes, because every time price touch this floor, one of the things we must know, every time price touch this floor, there is a significant buy. In fact, the last time price touched this floor, it came here to challenge the descending trend line. So now, if price wants to leverage on what it's doing on this floor, it could technically come to this zone, right? Because for every time it comes, you had a considerable buy. So if price want to leverage on what it's doing previously and it returns here for a buy, once price comes here, it breaks the structure, it gives you the ability to challenge the descending trend line. And if we have that breakout, NZD has escaped. It has escaped. And this is very much possible. And return here. If it returns here, here is a very strong selling roof. It's a very strong selling roof. And let me correct it from a monthly perspective, because on the quarter it wasn't really giving me what I want to see because of the quarter candles are so big, and it's really annoying. So this is what we have on a monthly, which looks a little bit decent. And for somebody who does not have patience, you can tolerate a monthly candle. But for those who are institutional traders, who are hedge fund managers, who are managing funds in millions of dollars, you don't trade daily candle, you don't trade weekly candle, you stay on quarter and yearly candle. Come on. That is where the analyses are made. That is where monetary decisions are made. And you can see that beautiful roof. Very beautiful. I love this structure. I love it so much. I love it. Look at what price have done here. We have here as a demand floor, another demand floor and a break of structure followed by a retest and followed by a retest on a monthly. You place your monthly sell, go home, go for holiday, stay with your family and be playing, and you see the money drop. They return again, place another sell drop and look at it. And if it comes here again, it's a sell drop. Yes, it's a sell drop. The reason I say it's a sell drop is that at this level, the market will face exhaustion. That exhaustion the market will face will be the exhaustion of the liquidity required to break out from the descending trend line. I want to change the color, DTL. So if price breaks out from that structure, then of course a lot of liquidity must have been required to break that structure. So if it comes here, it will face exhaustion where price will likely sell down, and another sell down here we use here as a demand floor, and continue to create a new structure for NZD USD. That's a beautiful structure. New Zealand is a very strong economy. Oh. You know, a lot of time people look down on them. Their economy is very, very strong. It's a very strong economy. So we'll look at the USD ZAR, USD against South Africa. That's also another economy that is emerging coming from Africa. And of course, it's our own. We cannot ignore our own. And it's very funny that I cannot find Nigeria here. I don't know why the country is like that. I don't know why. You can't find Nigeria here. USDNG, you can't find it. It's very, very pathetic. But we hope that things get better with time.